Good morning, everyone. Well, after a lackluster day in Europe when even a larger than expected fall in Eurozone inflation couldn't support the dollar, yesterday's speech by Fed Chair Janet Yellen, together with some mixed economic data, pushed the dollar down further against most currencies. While Yellen's speech didn't break any new ground, it did remind the market more of her earlier dovish stance than the surprisingly hawkish sentiment she expressed in last month's congressional testimony. The key phrase was, "I think this extraordinary commitment is still needed and will be for some time." Personally, I'd look at what the FOMC does, not what they say. So far, they've been steadfastly moving towards tightening policy, and I expect that trend to continue. We should also remember that Yellen's definition of a considerable time during her congressional testimony was 6 months or so. So when she says for some time, this certainly doesn't mean indefinitely. The yen eased as risk-taking sentiment continued to pour back in the market. The fact that the Topix index has been up 7 days in a row has also helped the recovery in dollar-yen. The Tonkan survey was largely worse than expected, but nonetheless, the fact that the stock market shrugged it off shows that this wasn't a big concern. I think dollar-yen can continue to move higher as Japan's current account surplus continues to erode. The Reserve Bank of Australia left rates unchanged, as had been unanimously predicted in the pundit world. The Australian dollar fell slightly after the announcement, as Governor Stevens observed that the economy would be getting less of a boost from the currency because of its recent rise. It wasn't so long ago that officials were talking about 85 cents or even 82 cents as a more appropriate level for the Australian dollar. The risks to Australia were underlined today after the HSBC Market March PMI for China was revised down slightly. I still feel that the Aussie dollar should have more of a China risk premium built in and should weaken in the future. Following the China PMI, today we get the manufacturing PMI figures for March from several European countries, the Eurozone as a whole, the UK, and the US. As usual, the final forecasts for the French, German, and Eurozone figures are the same as the initial estimate. The UK manufacturing PMI is forecast to be down a bit to 56.7 from 56.9, while in the US, the ISM manufacturing PMI is expected to have risen a bit. That would probably prove dollar supportive if it proves correct. However, following the disappointing Chicago PMI yesterday, I'd say expectations have probably been revised down somewhat. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google Plus to get more trading ideas. This is Marshall Giller, Global Head of FX Strategy at IronFX Global, wishing you solid trading.